Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories within corporate filings. And today we are diving into Clearway Energy's latest report. Get ready because this one is all about how they plan to raise a whole lot of cash through their stock. Before we get into the nitty gritty, if you love getting direct insights from SEC filings without all the corporate jargon, make sure to hit that subscribe button. And for more exclusive content and to join our community of sharp financial minds, check out the Discord link in the description below. So what's the big news here? Well, Clearway Energy is essentially announcing a new plan to sell its Class C common stock through what they call an at-the-market or ATM program, and they're aiming to raise up to a cool $100 million. Think of it like a continuous stock sale where they can sell shares whenever they want at the current market price, making it a super flexible way to get cash. This filing formally lays out the agreement with several big-name investment banks like Morgan Stanley and BofA Securities, who will act as their agents. In selling these shares, it's basically a handshake deal with these financial giants to manage the process of offering and selling Clearway's Class C common stock. This agreement is key because it allows them to tap into the public markets whenever they see an opportunity to sell stock and raise capital. Now, a quick note on their stock, they have Class A and Class C common stock. This ATM program specifically focuses on selling the Class C shares. For us regular folks, the key takeaway is that Clearway is looking to bring in new money by selling more pieces of the company to investors through established financial channels. The date of this whole operation is August 6, 2025, and that's when this agreement officially kicked off. It's important to remember this isn't a one-time sale of a block of shares. Instead, it's a rolling program that allows them to gradually sell shares over time as market conditions are favorable. This is where we see the core of their fundraising strategy. They have the green light to sell up to $100 million worth of their Class C common stock. The agents, those investment banks we mentioned, will handle the actual selling process, likely through regular transactions on the New York Stock Exchange. This is a common tactic for companies to manage their capital needs without disrupting the market too much, with a single large offering. So what's all this money for? Clearway is being pretty clear here. This cash is for general business needs. That includes paying down or restructuring debt, which is always a good sign if they're managing their liabilities smartly. It's also for daily operations known as working capital, investing in new projects or equipment, making strategic acquisitions, and generally funding their growth plans. They might even invest any cash they don't need right away in short-term safe investments. This part talks about the official paperwork. This whole stock sale is being done under a pre-approved registration statement that they filed back in 2023. Think of a shelf registration as a pre-approved vending machine for selling stock. It allows them to quickly sell shares without having to go through the entire registration process each time. The prospectus supplement is like the specific menu item they're offering today, outlining the details of this particular stock sale. This section is about telling everyone the same news at the same time, which is called Regulation FD disclosure. What's important here is that on the same day, August 6, 2025, they also put out a press release announcing this ATM program. This ensures that all investors, big or small, get the information simultaneously, preventing anyone from having an unfair advantage. Now, this is where they list all the supporting documents for this report. And what's particularly interesting here are the exhibits. They've attached the actual equity distribution agreement, the legal opinion from their lawyers, Baker Botts LLP, and the press release. For us, the most crucial document is Exhibit 1.1, the equity distribution agreement itself, as it contains all the nitty-gritty terms of this massive fundraising plan. This is the big one. It's the legal contract that binds Clearway Energy and the investment banks. It lays out the responsibilities, the fees, the terms of sale, and all the legal protections for both sides. This is the bedrock of their plan to raise $100 million. This is the public announcement. Think of it as the company's official voice to the world about their fundraising plans. It's designed to be straightforward and informative, hitting the key points of the ATM program. And finally, at the end, we see the signatures. This confirms that responsible people within the company, like Kevin P. Malkani, General Counsel and Corporate Secretary, have reviewed and authorized this report. It's a formal sign-off that the company is indeed filing this information with the SEC. So what's the real story here? Clearway Energy is proactively managing its finances by securing a substantial line of credit through stock sales. This ATM program gives them the flexibility to raise capital as needed, which is a smart move in the dynamic energy sector. It signals a focus on growth and potentially shoring up their financial position by having ready access to funds. However, we should also consider what this means for existing shareholders. When a company sells more shares, it can dilute the ownership stake of current investors. This means each existing share represents a slightly smaller piece of the company. It's a trade-off. The company gets cash for growth, but existing shareholders might see their percentage ownership decrease. The company's stated use of proceeds paying down debt, funding working capital, and investing in growth generally paints a positive picture. It suggests a company that is not just looking to raise cash, but has a clear plan for how to use it to improve its operations and expand. The fact that they are using established channels like the New York Stock Exchange and working with reputable banks also adds a layer of credibility to their strategy. Looking at the broader context, Clearway Energy operates in the renewable energy space, which is a growing but competitive industry. Having access to capital is crucial for developing large-scale projects, acquiring other assets, and staying ahead of competitors. This ATM program is a tool that helps them achieve those goals. In conclusion, Clearway Energy is making a strategic move to secure significant funding through a flexible stock issuance program. This shows a company that is actively managing its growth and financial strategy. The key for investors to watch will be how effectively they deploy this capital and whether the benefits of their investments outweigh any potential dilution from the stock sales. It's a signal of ambition, and we'll be keeping a close eye on how this plan unfolds. Alright, that's our breakdown of Clearway Energy's latest filing. What's your take on their fundraising strategy and what it signals for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate finance. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.